and welcome. Zach here, together with Martin Wong, founder of iVSA. I'd like to thank you for taking your time to watch this video. Once again, I would like to repeat our disclaimer that the information provided is for education purpose only. Any decision making should be at your own risk. In this Q&A section, we would like to discuss about stock pickings. And Mr. Martin, our very first question, which is more important, return of equity or free cash flow if the company have no debt?
That's a very good question, Zach. Now, all things being equal, I always like to choose free cash flows. Why? Because it's an important aspect of a company. As over years, as a private investor and fund manager, that's my personal preference. Now, a company that has little or no debt normally have good free cash flows. With addition of free cash flows, it is really a bonus. It is a self-generating cash for the company. Now, these cash flows can be channeled back into the company as working capital, thus reducing borrowing at times. Now, on the profitability analysis, like return on equity, which we talk about, earnings of the company can be manipulated through very aggressive accounting practices. But cash flows is harder to fake.
Thank you, Martin. The second question I would like to ask is where to begin with any investments?
Good one. For investing purposes, like us we look at, I always look into the company. I would suggest first, start with the fundamental of the company. I look at its business first, then the management, and then the financial, but not forgetting its valuation. Now, analyzing businesses that you already deeply admire. Now, if you are a die-hard fan, Apple like me, maybe researching more on Apple will give you a great interest and satisfaction as you dig deeper, allowing you to gain more insights into the company like Apple. After fundamental selection, I would use iVSAchart Auto Trade Advisor for my market timing. Entrance is critical, but iVSAchart can automatically handle it by our minor green diamond to buy and red diamond to sell. Overall, I am able to select good fundamental companies backed by good cash flows, low debt, growing industry, right, and good management. The icing on the cake is definitely the market timing by iVSAchart. Now, market timing is possible despite many traditional investors saying it's impossible.
Okay, for the last question for today, how do you invest in the Malaysian given the lack of information provided by the management?
Now, that's another good question. Generally, a large chunk of information that is out there is redundant. Basically, it simply says it is noise. Now, most of the time, 80% of my investment decisions are just based on first 20% of information that I found about the company, like what I just talked about earlier on. I look at the fundamental first, and then with the technical aspect of the company by looking for signs of accumulation and signs of distribution by smart money. So we don't need to have very detailed information about the company before we make a decision. After all, we need to have a trading plan, where to enter, where to exit, and stop loss to prevent a calamity like a big sell-off. Now, as long as we are clear about the risk and reward payout and buying into fundamentally sound companies, we have a fruitful experience in investing. After all, there is no such thing as perfect company.
Okay, thank you, Martin, for this Q&A sections. Feel free to contact us if let's say you have any question for Martin to call by next week, and we'll see you soon. Thank you for watching.
Thank you.